Okay, folks, welcome back to Goldbach Levels and Price Symmetry. This is the second module of the guide that I'm giving for traders um, that want to grasp the foundations of their Goldbach knowledge, right? So if you haven't seen part one, go check out part one. It includes the very basics of where we even get these levels from. Okay, so part two, we're talking about Goldbach levels and price symmetry. Before we even go on to the lesson, a lot of people have been asking about the indicators, the settings, etc. This is where you find it. This is the name of the person that created it, ProMuckaJ. Goldbach levels PO3. You can see there's a PO3 number here. You can change it to whatever setting you prefer, 729, 243, 81, etc. In the previous module, we talked about the use of the different PO3 numbers. So you should know that by now. You can change the levels, change if you want to keep the non-go back levels, change the colors, dash, line, hard line, dotted line, etc. Okay, so this is the indicator I use when I want to figure out what levels, what range I'm in. PO3 Goldbach levels by ProMuckaJ. There's different indicators. There's some that have just Goldbach levels, some that have all of the levels, some of that tells you time, some of them tells you the accumulation, manipulation, distribution. They're a really all-in-one encompassing tool. Okay. Now for the lesson, Goldbach's conjecture applied to the markets. Every even number greater than 2 equals equals the sum of two prime numbers. To translate this, every complete range can be expressed as a pair of prime levels, premium and discount. Okay? For example, 3 plus 97 equals 100. 3% of the range and 97% of the range form symmetrical ends of the dealing range. I'm going to show you what this looks like as a concept, and then I'm going to show you what this looks like on the actual chart. Okay? For an analogy, it's like two weights balancing a scale. If one side is premium, is heavy, the other discount must counterbalance. Okay? So, like I just explained, 3 and 97, their harmony to make 100. In this example, algo 2, right? These are the different models of the algo. We're going to go into that in another portion of the guide. But just to illustrate the example, as you can see, 97 is being respected, right? It's rejecting from 100%. It doesn't want to go above 100%, right? And the 3 is the opposite, right? Because premium and discount, this is premium, this is discount. Price, right? In this example, price is rejecting the 3, which makes it a balanced range, okay? This is very important into understanding your algos and your dealing ranges and why price won't reach all the way up into 100% of the range, or why price won't reach all the way to below 0% of the range, right? It's rejecting 100% of the range and is rejecting 3% of the range. It's within these confines and it's a balanced market, okay? So just like how we talked about here, 3 plus 7 equals 100. It's a balanced market. It's the same thing. It's rejecting the 100% of the range. It's stuck in the 97 rejection block. And it's rejecting the 3% of the range, the opposite side. Okay? Same is true for the bullish example, right? It's rejecting the 97, right? And it's heading up to and rejecting the 3% of the range in the bullish example. Okay? So each particular partition defines a functional zone. The 3 and the 97 is the rejection block. The 11 and the 89 represent the order block. The 29 and the 71 represents the liquidity void. The 41 and the 59 represent the breaker. Okay. These mirror ICT's PD array, proving symmetry between mathematics and market mechanics, right? This is the language that ICT uses, right? Breaker, liquidity void, order block, rejection block. As you can see in our math equation, on our math foundation, we're able to basically get the same things, right? And our philosophy or theory, 3 and 97, is the same as ICT's theory, rejection block, right? So there's just a parallel that is being drawn, and that you can see it very clearly now that we have names and numbers to them, right? Um, Nasdaq often respects the 29 and the 71 levels during high volatility expansions, right? And that's proof that the liquidity void, this 29 and the 71, it respects those levels because it's the end of an algo, which we'll get into, right? It ends the algo here, right? So you'll see huge expansions from these levels, right? Rejecting or supporting price, okay? We also would have what's called non-Goldbach semi-primes, also known as hidden traps. 23, 35, 65, 77 act as prime levels, multiple of primes, represent hidden zones where false liquidity or retracement traps occur. Like false floors in the building appear stable but aren't part of the original foundation, right? So I'll show you an example of this so you have an idea. In a market, this was um, October 31st, and an example of false primes and traps that are occurring are here, right? This range right here. You can see it's generating liquidity on both sides at the 65 partition, right? The breaker partition. As we've seen, 65 is act as a semi-prime, which also is a hidden trap, right? So it generates liquidity both sides, traps the sellers, right? Or sorry, traps the early buyers, right? And then manipulates into a prime level 50, sweeping liquidity, or a key level, I should say, sweeping the sell side first, and then going back to get the buyers, the early sellers. I don't know if you can follow what I'm saying. So we're in the 65 semi-prime. We stop here, regenerate liquidity. We take them out, reject off of a Goldbach level, impulse higher to take out the other side. So like we said, they represent hidden zone where false liquidity or retracement traps occur. And we see that here, right? Generate the liquidity. It's a trap for the early buyers. It's not the right level or the right time. We come down, we sweep into a Goldbach level, reject, test the level, and then go higher, right? To take out the sellers that are up here, liquidity up here, and then respecting our our high, okay? So that's gonna wrap up this end of the guide of this module. The next module we're going to be discussing is dealing ranges and range dynamics. Okay, so please, if you enjoyed the video, like it, subscribe. I have more modules on the way that are, again, a tool for you as a trader to further your Goldbach knowledge, and to take certain tools and certain concepts that fit right with you to create your own trading system. All right. So until then, I'll see you in the next video.